Since 2022, we've seen 12 historic rises in interest rates. That's a massive strain on anyone's business plan. And then we've also seen explosion of insurance costs. So many of you that have leverage, right, a loan with a lender, that lender is imposing upon you certain insurance requirements that you have to have at the property. And seeing those insurance costs rise exponentially, like 73%. Sometimes over 100% in certain markets or submarkets. That again is a strain and a stress that sometimes properties just can't bear. Hey, welcome back. Dugan Kelly with Kelly Clark. Whenever you're talking about loan restructure or modification, I like to remember and remind clients, whether you're a buyer, seller, sponsor, operator, syndicator, and I use a lot of those terms interchangeably with one another, you are a steward first and foremost of other people's money or the property as a whole. And so when I look at stewardship, I really look at the definition of what a steward really is. We look at that as the careful and responsible management of something entrusted to one's care. So when you think about you as a person as owning a piece of property for the benefit of other people, many of them are passive investors, you're really a steward. And so when you're thinking about, is your deal in distress? Well, why is it in distress? And what's the best form of stewardship? Well, we've seen in recent months and in the past year, a tremendous swing in market volatility in the commercial real estate. And what are some of the important components of why I think that the market is so volatile? Well, we've seen a historic rise in interest rates, right? Anyone that says that they had a crystal ball back when the Fed started raising interest rates, I would say no, you didn't, and nobody predicted that. So we've seen since 2022, we've seen almost 12. We've seen 12 historic rises in interest rates. That's a massive strain on anyone's business plan, regardless of what type of asset that you have, particularly if you've got a loan on that. And then we've also seen explosion of insurance costs. So many of you that have leverage, right, a loan with a lender, that lender is imposing upon you certain insurance requirements that you have to have at the property. And seeing those insurance costs rise exponentially, like 73%, sometimes over 100% in certain markets or submarkets. That again is a strain and a stress that sometimes properties just can't bear. And then finally, we see utilities are up more than 40% in some markets and submarkets. And then we see this maturing rate caps, right? So if you have a floating rate loan or you have a bridge loan that you potentially your lender at acquisition allowed you to have a rate cap for only 2 years of a 3-year loan, and now you're forced to have to go and repurchase a new rate cap on that same loan, you're seeing massive disparities between what the premiums were when you purchased the property on a rate cap versus what you're looking at now. So just by way of example, if you had a property that sold in 2019 for like $100 million, the rate cap likely would have been millions of dollars less than what the premium is today in that market. So you could see those are some of the factors, not the only factors, but these are some of the key indicators as to why there's such market volatility and why your deal might be one that needs a potential remodification. So in late June of 2023, the Fed, the FDIC, and other regulators came out with what they call joint guidance for not only for you as a borrower, a sponsor, an operator, syndicator, but also to banks, both bridge lenders and agency lenders, that they wanted all of the lenders to work prudently and constructively with other creditworthy borrowers to potentially modify or restructure their existing loan. So that's pretty encouraging news, right? But it's only encouraging news if one, your lender knows about it, which most likely they do, but it's also important that you know about it so that you know that you can approach your lender or your servicer, the person that you recognize as the person that's taking in that monthly mortgage nut, and making sure that you're actually paying your bills. So you want to make sure that you're communicating clearly with them about what possibility for a loan modification or restructure that you're looking for. Now, what was the main guidance that was given to lenders? And the reality was they were basically told to pretend that the loans are performing. So most banks are looking at and wanting to make sure that loans that are held on their balance sheet are actually performing loans and they're not non-performing loans. And the joint guidance is that we're not going to punish you. We're not going to deter the fact that if you're a lending institution, that we want you to modify or restructure those loans to make sure that otherwise creditworthy borrowers can actually ride out the volatility in the marketplace. So this whole pretend that the loans are performing was kind of one of the main key indicators and takeaways from that joint guidance that came out in late June 2023. So if you're somebody that's thinking that your deal might be in distress, the reality is it probably is, right? And you need to wake up and figure out, is it time to approach your lender? Is it time to ask and engage in that dialogue with your bank about possibly restructuring or modifying your loan? There's a beautiful quote by Winston Churchill, and he says, however beautiful the strategy, you should occasionally look at the results, right? And the reality is that results matter, right? So you could have the best strategy possible about approaching your lender for a loan modification, but if ultimately your ask to the lender is simply unrealistic, it's not even in the same universe, then your lender's not going to pay attention to it and you're not going to be able to restructure or modify your loan. So when you're putting together your plan, you really need to make sure that it is an appropriate plan for your property and it takes into account the lender's position as well. So let's talk about what are areas of possible modification that people might be looking at. So we're going to look at fixed rate versus floating rate. Obviously the interest rate that you have on your particular loan. We're going to look at the possibility of a rate cap modification, whether that's putting more reserves with the lender and not doing a rate cap or renewing a rate cap. We want to look at what reserves the lender presently has, whether they're capital expenditure reserves or their interest reserves or other types of money that's already in your loan that the lender has not released to you, whether that might be able to be applied towards the pay down of the loan, the monthly debt service on the loan, or some other form of it. And then the debt service coverage ratio, the DSCR. Many of you know what that is and some of you don't. I encourage you to look up that aspect of it, but I would say, in my opinion, most DSCRs throughout the United States are blown right now, particularly in the commercial real estate space. So don't be alarmed if you believe that your DSCR is underwater or it's not in compliance with what was when you acquired the property. That's understandable given the volatility in the markets, but that's an area in which you might talk to your lender about possible modification. And then obviously the maturity date and what fees are being charged. So extending out the possibility of that loan, maybe lowering the interest rate to a current pay and then maybe an accrued pay on the back end of that loan. These are areas in which you might want to start thinking about the possibility for your loan and what restructure or modifications might take place. Thank you for joining us. If you like this content, please like our page, subscribe to our page. We would love to send you more additional free content. Check us out on LinkedIn, Instagram, Facebook, wherever we might be. And you can always Google my name, Dugan, D-U-G-A-N, on the internet. You can call us and we'll schedule a free consultation. Thank you. God bless.